Hey tech fans, welcome to the Thursday edition of the Tech Stocks Daily Podcast. Today we're diving into a bonanza of juicy updates, Google's AI overviews expansion, courtroom drama, and potential corporate shakeups. We're also unraveling the legal woes haunting UiPath, the crypto craze fueled by MicroStrategy's new leveraged ETF, and Sysco's savory dividend announcement that's got Wall Street buzzing. Stick around as we break it all down, sizzling in swagger and spice. You won't want to miss a second. All right, tech fans, strap in because today we're diving into the world of all things Google. First up, Google just announced it's rolling out its AI overviews feature to 6 new countries: the UK, India, Japan, Indonesia, Mexico, and Brazil. This comes after the feature launched in the US back in May. Imagine getting a preview of any topic or query directly in the search bar, based on a variety of sources. Pretty neat, right? In India specifically, Google is all about that local flavor, offering AI overviews in both English and Hindi, with features like a language toggle button and text-to-speech capabilities. They even have a listen button for when you don't feel like reading. Why is this important? Google found that people in India, more than any other country, were keen on listening to AI overviews. Plus, having AI provide summaries drove users to visit a more diverse range of websites and pay closer heed to the ones they actually clicked on, upping the quality of web traffic. Google is also testing links directly within AI overviews to make accessing supporting web pages a breeze. And it turns out, this could drum up even more traffic for publishers. Next, let's switch gears to Google's potential breakup. According to Gene Munster from Deepwater Asset Management, a company breakup could unlock a whopping 20% of its value. How, you ask? By potentially separating the ad network, which contributes roughly 11% of Google's revenue but has been in decline and could be a target for regulatory action. Despite all this talk, the chance of Google breaking up voluntarily is exceptionally low. So don't hold your breath for a breakup party just yet. Continuing with the good vibes, Google just cut the prices of its older Pixel smartphones in India following the launch of the shiny new Pixel 9 series. You've got price cuts across the board, from the Pixel 8 and Pixel 8 Pro to the more wallet-friendly 8A and 7A models. Pixel 9 series pre-orders are now live and come with attractive discounts and bundled offers, including a sweet deal on Google's Pixel Buds Pro. Finally, let's dish some courtroom drama. Remember the Epic v. Google case? A federal jury found Google's Android App Store to be an illegal monopoly. Judge James Donato isn't buying Google's excuses about the cost and work involved in opening its App Store to rivals. He's putting his foot down to dismantle this monopoly. The key proposal? Let rival stores operate within Google Play and have access to every app without Google playing gatekeeper. This legal saga has big implications for how Google will treat rival app stores and could force significant changes to its business practices. So, there you have it. Google is making waves today with new AI features, hot debates about its corporate structure, slashed pixel prices, and a courtroom standoff that's straight out of a legal drama. Stay tuned as these stories unfold. Hey everyone, today we're diving into the whirlwind surrounding UiPath, a company that deals in robotic process automation. If you're invested in the tech sector, especially in companies listed on the NASDAQ, this is one news bite you shouldn't miss. So what's the buzz? 2 major law firms, Faruqi & Faruqi LLP and Robbins, Geller, Rudman & Dowd LLP, have placed UiPath under their legal microscopes. Both firms are investigating claims on behalf of investors who suffered significant financial losses. All right, let's break it down. First up is Faruqi & Faruqi. They're urging investors who endured losses exceeding $100,000 between December 1, 2023 and May 29, 2024 to come forward. The law firm alleges that UiPath and its executives violated federal securities laws by making misleading statements about the company's turnaround strategy. UiPath claimed its strategic investments and market activities were driving momentum and that their AI technology was game-changing. However, the company dropped a bombshell on May 29, 2024, announcing that CEO Robert Enslin was stepping down and reporting dismal first-quarter financial results for FY 2025. This caused UiPath's stock price to plummet a staggering 34% from $18.30 per share to $12.07 per share in just one day. Yikes. Faruqi & Faruqi are reminding investors of the August 19, 2024 deadline to seek the role of lead plaintiff in the class action lawsuit. They encourage everyone with any insider information, including whistleblowers and former employees, to reach out. They are painting a picture of corporate promises that didn't match reality, especially when it comes to the company's capability to scale their AI products and meet customer needs. Next, we have Robbins, Geller, Rudman & Dowd LLP announcing a similar but independent investigation. They assert that during the same period, UiPath's turnaround strategy had all but flopped. The law firm charges that UiPath's management misled investors by painting an overly optimistic picture of the company's go-to-market strategy and AI capabilities. They further allege that the company's inability to scale its AI-powered tools caused considerable customer confusion, ultimately leading to difficulties in closing large multi-year deals. Robbins, Geller has pointed out that after the departure of CEO Robert Enslin and subsequent poor financial disclosures, UiPath stock nosedived dramatically. The law firm emphasized that any investor within this class period has until August 19, 2024 to seek the appointment as lead plaintiff. 5 days, folks. Both law firms highlight the significance of taking quick action, so if this sounds like it affects you, better get your dialing fingers ready. In essence, UiPath's news today serves as a cautionary tale for investors and tech companies alike, underscoring the critical importance of transparency and genuine operational effectiveness. Make sure to stay tuned as this story develops. Legal battles like this one can have long-standing implications for corporate governance and investor confidence. That's the gist of today's tech legal drama. Stay sharp and happy investing. Hold on to your wallets, folks, because MicroStrategy is making headlines today like it's the crypto world's rock star. So what's the scoop? Well, there are two major stories that have everyone buzzing about this company that's become pretty much synonymous with Bitcoin. First up, we're entering some wild financial territory. The very first Bitcoin-related leveraged ETF hit the US market, and it's a big deal. We're talking about the leveraged MicroStrategy ETF, MSTX, which aims to give you 175% of the daily performance of MicroStrategy stock. It's like throwing Bitcoin exposure lovers a financial cherry bomb. Now, to put this in perspective, MicroStrategy already has a reputation for outperforming 99% of the S&P 500 firms, thanks in large part to their massive Bitcoin hoarding, no joke. According to Michael Saylor, the company's founder, this isn't just another ETF. This could be your ticket to ride some seriously wild financial waves, given MicroStrategy's eye-popping stock performance. For the investors who can't get enough of crypto volatility, grab your popcorn, because Eric Balchunas from Bloomberg calls this potentially the most volatile ETF in the US. But before you feel all FOMO-ish, consider this. This leveraged ETF isn't child's play. Defiance ETF's CEO Sylvia Jablonski pointed out this product's designed for more sophisticated investors. ETFs like these attract flows that can notably impact the cryptocurrency they're linked to, in this case, Bitcoin. Yet, with great gains come great risks, so it's not something you'd recommend to your Aunt Sally. Now, the second piece of our MicroStrategy saga. Is it too late to hop on the MicroStrategy merry-go-round? The company is an analytics software expert by trade, but let's be honest, they've become the hoarder of Bitcoins first and foremost. They already snatched up more than 1% of all Bitcoin that will ever be mined. Yeah, they're that serious. Even though they had a 10-for-1 stock split, that ship has sailed. Their current strategy is to just buy more Bitcoin. They had a rough Q2 in 2024 with a $102.6 million net loss, largely due to an impairment charge on their Bitcoin stash. So, when Bitcoin fluctuates, so does MicroStrategy's stock. Michael Saylor, the executive chairman, keeps predicting sky-high Bitcoin prices, citing insane numbers like a $280 trillion market cap by 2045 and Bitcoin at 13 millionaires. If you believe him and don't mind the financial roller coaster, it might not be too late to get on board. However, keep in mind, they're funding this crypto shopping spree through debt. They recently issued $800 million in notes to buy even more Bitcoin. Some investors might flinch at the idea of borrowing to buy a speculative asset, but that's MicroStrategy's way. There you have it. Whether it's through a risky leveraged ETF or direct stock purchases, today is filled with all things MicroStrategy. All right, tech enthusiasts, today's top story is all about Sysco making waves in the financial cooking pot. If you've ever dined out, grabbed a meal from a hospital cafeteria, or heck, snagged some munchies at your local lodging establishment, chances are you've been touched by Sysco's magic pantry. So, why are we chattering about this culinary giant today? Well, the big news is that Sysco just rolled out the financial red carpet with the announcement of their quarterly cash dividend. Yep, chat about pulling a juicy chicken from the oven. Each common stockholder on record by October 4th, 2024 will pocket a crisp 51 cents per share on October 25th, 2024. That's a mouth-watering payday if you ask me. Now, for those of you not familiar with Sysco, they're basically the go-to guys for anyone running the show in the food biz. They don't just serve restaurants, they're a one-stop shop for healthcare facilities, schools, hotels, pretty much anyone who's feeding the masses. With over 76,000 employees, operating 340 distribution hubs around the globe, and serving approximately 730,000 customer locations, Sysco essentially has a PhD in food distribution. In their fiscal year 2024 ending on June 29th, Sysco raked in sales surpassing $78 billion. That's enough dough to make even Scrooge McDuck sideline his money pool diving career. But it's not all about the dollars. Sysco has a commendable commitment to sustainability and diversity, encapsulated in their 2023 Sustainability Report and 2023 Diversity, Equity, and Inclusion Report. Now, if you're thinking, this is fancy, but where do I get the nitty-gritty? Sysco's game plan for keeping its investors and the public informed is detailed on their investor relations website at investors.sysco.com. As journalists and tech gossipers, we rely on these official channels, and you savvy viewers could benefit too by scouring these hubs for the latest scoops. Sysco is not just making moves, they're setting the kitchen on fire with their meticulous, sustainable, and financially rewarding practices. They're like the Gordon Ramsay of the food distribution world, but with fewer F-bombs and more dividends. So, what do you folks think? Are you cooking up dreams of getting Sysco stocks now that you know they've got such savory dividends? Or are you already spicing up your portfolio with Sysco shares? Drop your thoughts in the comments below. We're savoring every bit of your feedback. Got some spicy opinions or burning questions about today's scoop? or anything else in the tech world, leave a comment down below, smash that like button if you enjoyed the segment, and don't forget to subscribe for your daily tech tapas. Catch you in the next update. All right, tech aficionados, let's take a closer look at MicroStrategy with today's news in the limelight. So, should you sell, buy, or hold? Drumroll, please. My verdict is hold. Here's why. MicroStrategy is synonymous with Bitcoin at this point. They've amassed over 1% of all Bitcoin that will ever be mined. That's like becoming a whole crypto continent of their own. With the debut of the leveraged MicroStrategy ETF offering, it's set up to attract investors who crave high volatility and the thrill that comes with it. And who doesn't love a good thrill, right? But let's keep it real. While Michael Saylor's sky-high predictions for Bitcoin's price sound like a plot from a sci-fi blockbuster, you've got to factor in the company's rocky financial moments. Despite their aggressive Bitcoin buying strategy and even a recent 10-for-1 stock split, they've faced some net losses, a $102.6 million hit from Bitcoin impairments just this past Q2. It's like betting on a roller coaster, knowing it could go screamingly high or send you plunging down. Given all this, today's news leans towards holding onto your stock. The leveraged ETF is a game changer, but comes with its own set of risks, and funding their Bitcoin spree via debt means they're not playing it safe. One thing is crystal clear. MicroStrategy stock will continue to swing with Bitcoin's price. So if you're in the investment game for the long haul and have a penchant for high-risk gambits, holding on might just be your ticket. But if you've got stressed out nerves and can't stand volatility, maybe not so much. Remember, this isn't financial advice. Always do your own research and consult with investment professionals before making moves. What's your take on this bold strategy by MicroStrategy? Is it hold on and enjoy the ride, or hop off before the next loop-de-loop? Share your thoughts in the comments. Today's market was buzzing with excitement and drama. Google rolled out its snazzy AI overviews to 6 new countries while facing courtroom battles and potential corporate splintering. UiPath is under legal scrutiny, contemplating its investor relationships and credibility. MicroStrategy rocked the financial world with the launch of a leveraged ETF and a hefty focus on Bitcoin, making everyone wonder, is this a golden ticket or a risky bet? Sysco dished out dividends like a culinary master, securing investor appetites for future gains. Like this video? Make sure to smack that like button, subscribe to keep up with all the tech action, and share it with your fellow tech enthusiasts. Don't miss out. Come back tomorrow for your next dose of daily tech news.